Hi everyone! In today's video, we'll be diving into one of the most common assumptions of property buying, that is being near an MRT guarantees higher profit. I will share key insights on what to really look out for, especially when the near MRT effect seems like a no-brainer. Whether you are a homeowner, investor, or just someone curious about the market, I will walk you through some of the real case study where some owners actually doubled their profits. Stay with me to the end, where I'll also review some of the current projects that you can consider if you are looking for high potential growth. Let's dive in. It's no secret that being near an MRT is a top priority for most buyers. It offers high accessibility, great resale value, and also higher rental demand. In fact, study shows that properties within 400 to 700 meters of the MRT station can command a premium of 10 to 15% compared to those further away. But here's the key question. When does the premium make sense, and where might it eat into your future profits? Let's look at Principal Garden and Alex Residences, both projects near Red Hill MRT. We compare two similar size, high floor, 3-bedroom with a same 7 years holding period. Despite being a longer walk from the MRT station, Principal Garden outperformed with nearly double the profits. So why did Principal Garden outperform? Number one, it has a lower entry price. Even though it's a newer project, it actually launched at a lower PSF, which actually gives more room for capital appreciation. Number two, the expansive land size and premium appeal. Developed by developer UOL, it actually has very nice landscaping and a lifestyle-driven approach that appeals to the buyer. Number three, many of the units come with unblocked landed views. Buyers are willing to pay a premium for these priceless panoramic views, even if it means taking a further walk to the MRT station. This shows that MRT proximity isn't the only factor. When you combine good entry price, product appeal, and a strong exit potential, the result can be even better. Now let's compare Sengkang Grand Residences and Riverfront Residences, two popular projects in the Hougang Bongkot area. Even though Sengkang Grand Residences is right on top of Bongkot MRT and a mall, while Riverfront Residences is a 10 to 15 minutes walk to Hougang MRT, you'll be surprised to see that Riverfront Residences actually gave many owners more profits. Why did Riverfront perform better? Because their profits are actually protected since day one. Riverfront launched at around 1001 to 1002 PSF, while Sengkang Grand Residences were selling at 1006 to 1007 PSF. This means that the price range of 1006 to 1007 was already tested and accepted in year 2019 when these two projects are launched. So even if the market stayed flat, Riverfront buyers had a built-in upside. Selling later at the tested and accepted 1006 to 1700 PSF at a later date would already give them a margin of 400 to 600 PSF, which translates to 400k to 600k for a 1000 square feet unit. In contrast, Sengkang Grand buyers will actually face a tougher hurdle. To see decent profits, they have to sell for at least 1009 to 2000 PSF, and that will depend heavily on whether the market appreciates fast enough to support such prices. Buying at a lower price doesn't mean lower quality. Very often, it means lesser risk and greater certainty. That's exactly why Riverfront outperformed, even without an MRT at its doorstep. You must be thinking, can we still find such good buys in today's market? The answer is yes, but it's now harder to spot such opportunities. Opportunities like Riverfronts aren't gone, but they now require sharper analysis and quicker decision making. With new launches easily crossing over the 2000 PSF mark right now, today's market is more price sensitive and margin for error is smaller. Here are a few tips to identify potential winners. Number one, watch for motivated developers. Those under pressure to move unit often price more attractively. Number two, prioritize strong fundamentals. Look out for efficient layout, unique project attributes, and healthy supply-demand dynamics. Number three, prioritize pricing with a safety buffer. Choose projects where resale upside exists even if the market stays flat. In short, good buys still exist, but they are usually not the loudest or most hype. They are the ones that quietly offer value, upside, and protection, just like Riverfront did. Here's a glimpse into what we have found. We have been actively tracking the market, and yes, there are still smart buys out there. Here's a quick comparison of two standard opportunities we found, one in the OCR and another in the RCR. Project names are not disclosed as prices are subject to change. DM us and we'll be happy to share more details. while these opportunities are still available. So does buying near an MRT guarantees higher profit? Not always. As you have seen, proximity to an MRT is just one piece of the puzzle. In today's market, finding such opportunity requires sharper analysis, speed, and a focus on fundamental, not just convenience or hype. It's about buying smart, not just buying close. And remember, property is more than just a home. It is a tool for building long-term wealth. Just like we made a strategic call to sell our unit at Treasure at Tampines, the most successful moves usually come from clear-headed decisions, not emotional ones. If you are looking for your next smart property move or just want to know what will be a good buy in today's market, drop us a DM, we'll be happy to share more. Thanks for watching and see you next time.